someone I know, they have a whole lot of debt on their back right now when their father passed away because their father left things in disarray. When someone dies, they die, but their responsibilities don't die with them.
Welcome, everyone, to Chatting with the Experts, the TV show that showcases the professional excellence of women from Africa and the Caribbean who live in Europe, North America, the UK, or Australia, as well as those who live in Africa and in the Caribbean. Today, I have an amazing woman on as a guest because she is going to be talking about the lies we've been told about money. So for those of us who have connections with Africa and the Caribbean, I'm sure many of you have been told that the best place to keep your money is in the bank. And then there's some who tell you the bank isn't even safe enough for your money, that it's best if you keep your money under your mattress. Well, my guest, Sharon Carter, is here to debunk those myths. I will tell you a bit about Sharon. She is a wealth management professional at Northeast Planning Group in Long Island and specializes in life insurance, annuity, and long-term disability. She focuses a lot of wealth strategy for individuals, small business owners, and families. Sharon is licensed in 29 states across the country, and so she's able to help many in multiple states. Sharon is of Barbadian descent. Welcome, Sharon.
Hi, Paula. How are you?
I am great. And I'm even better because you're here to debunk some of these lies that we've heard about money. So tell us
Yes,
about that.
yes, this will be an interesting conversation for sure. All right,
Oh, all
all
right.
right. So,
I'm sure you heard me say that some people said the best place to keep your money is under the mattress. Do you agree?
I do not agree. Of course, I've heard that growing up, being of Bajan descent. You hear different things. We're conditioned to to believe and do certain things, both culturally and even being in this country in America. But being in the wealth management space, I've learned a great deal on. It's all about money management. You know what I mean? It's we can make money, but it's where do we put our money? That's going to be the difference between someone retiring and with a substantial amount or someone who has to go back to work at 75 to go get a
Hmm.
job at Walmart. It's we've got to learn to have these conversations, and not only that, but then to take action on what you learn. So to one thing I will let start off is that there's a book that I've read, and your viewers, I think they should look into it as well. It's called Rich and Righteous by a guy named Julian Gordon. I follow him
Rich,
on Rich
rich
and
and
Righteous.
righteous and
Yes,
righteous.
yes,
Okay.
correct. I follow him on Instagram. He's a very intelligent gentleman. And one thing he said is putting money in a bank, like in a savings account, at 0.03% interest rate means it will take a person 2,400 years to double their money.
Wow.
Okay. So that doesn't even account for inflation being at 5% or greater. With inflation, you're losing money by saving it. So a person has to find assets that have a 6% or greater rate of return at least in order to preserve their wealth, and then 10% or greater to grow it.
Hmm. Six
So
percent in order to maintain.
maintain, and then
Wow.
10% or greater to grow it. Now, I don't know about you. When I was growing up and going to school, I never heard that.
Nope, I didn't hear that either.
Never heard that. So, and I share that because we are in a, this economic environment with inflation, rising cost of food, and all these different things. And, we just keep doing the same old thing as putting our money in a savings account. I spoke to someone a few weeks ago that, they told me they got proceeds from selling a home and they put the money in, in a CD or I'm like, in the back of my mind, you don't put that type of money in a CD, So, but again, this is why we have to have these conversations and not be ashamed to ask questions and reach out to people who probably know more than you. But I say all that to say is that we can't keep doing the same thing we've been doing, especially when the economy was different. We have to do something different to get a different result. Okay.
Okay.
So another one of the things I wanted to talk about here is that there's three kinds of money. Okay, Paula.
Mhm,
There's the deferred bucket, right? We're going to talk about that. The
mhm.
taxable bucket, and then there's the tax exempt bucket.
Okay, so
So
say that again so that can stick. There's this tax.
okay, the tax deferred, right?
Mhm,
And that is, and I'll give an example. Those are the 401k plans, the 403b plans, the traditional IRAs, the pensions, the annuities. So that's where you can grow your money. However, you're deferring paying taxes, but you're going to pay taxes
in the
when
end.
at the end. Okay.
Okay.
Okay. Then there's the taxable bucket where the CDs, the money market accounts, the bank accounts, mutual funds, stocks, dividends, um, corporate and treasury bonds, and real estate. Okay. So that's where whatever money, you sell a house, you got to pay taxes on, you got to pay taxes, right?
Mhm.
Then there's the tax exempt bucket. There's the municipal bonds, the Roth IRAs, and then permanent life insurance. Now, before I was in the insurance space, my career was in corporate America, right? So when I was working and, saving for retirement, I had the majority of my money in the tax deferred and the taxable. So when I got laid off 8 years ago and the unemployment ran out, and I couldn't find a job and I had to dip into my emergency savings. When that ran out, I went where? To my tax deferred 401k account. And because I was not over 59 and a half, what did I do? I had to pay a 10% tax penalty on my money.
Hmm.
So, but if I had a permanent life insurance policy at that time with cash value, because I was in my, I was what, I was almost turning 40 that time.
Mhm.
And I had it say maybe from like a client of mine, he told me he had his first policy at 2021. If I had that, right, I'd been able to tap into the cash value tax free
Hmm. That's
and leave the
interesting.
401k, right? Leave that there.
Mhm.
And then I wouldn't have been in such a financial bind. So I say all that to say is that, when I talk to people about this stuff, I'm talking from experience. I'm not just reading a textbook. I've been there. I've tapped into the 401k. I've, I've depleted it. I've got laid off, multiple times. I had to start, so I bought a home. I've sold a home, I've done these different things that require money, that require knowledge, that require taking action. But because I didn't know everything, and a lot of people, you go to school, you get a job, but you don't have the financial literacy. That's something different, and that's going to require effort on an individual's part. Whereas you learn about the three different kinds of money, and maybe not putting all your money in one bucket and then you're paying more tax. You know what I mean? So these types of conversations need to become more of a regular, especially in our community, Paula. We are lacking greatly when it comes to understanding how these things work.
You are so right. So, as you said, you are talking from experience. You had to dip into your tax deferred,
Yeah.
your
401k.
401k,
Yeah.
and you didn't know at that time about permanent life insurance.
I didn't know that it was tax, it was tax free. I didn't, because growing up, I just thought, oh, someone dies, you get a lump sum of cash. But
That is it.
I didn't see life insurance as a way of a
Protect.
vehicle of money management, where it can be a money management vehicle. I didn't understand that. And having an MBA, I didn't understand that,
Look at my eyes.
I didn't
What?
learn that in grad school. I didn't. I got my MBA in fine, but I didn't learn that in grad school. I didn't. I've told people I've learned more about money now being in the wealth management space than I did when I was getting my MBA. And it's true.
And that's interesting. Wealth management. So you're managing people's wealth. That's how come they
Yeah.
become wealthy, because they know how to manage their, they understand that money is a tool.
Yeah. Yeah. You know,
So,
so
I want to hear a bit more about the permanent life insurance and how that benefited you and how that can even help somebody. Because as you said, most of us think about life insurance as something that you need to have, you know,
yeah, when in case
people sometimes say,
I,
well, do you want to kill me? Why do you want to know about why do you want to encourage me to have life insurance? So tell us a bit more about that.
I encourage people to get it because one, it's a robust, sophisticated vehicle, permanent life insurance. There's two
Okay.
types. There's whole life, and then there's index universal life.
Tell
But
us more.
they both have the ability to accrue cash. They both, are tax. If you pull money out, put money in, there's no taxes. Um, they both have the ability to um, be a wealth building tool to accelerate someone's wealth, because one is, especially the index universal life, you get the gains from the market without your money being directly in the market, if that makes sense.
No, it
So
doesn't make
now,
sense. Tell
so
me
what
more
that
about
means, okay,
that.
so
Yeah.
I'll tell you. So there's
Tell
something.
us more about that.
So what that means is someone pays a monthly premium. I'm just throwing out a number, $400 a month, just as an example.
Mm-hmm.
Um, Out of that $400 a month that someone pays for their policy every month, say, it costs the insurance company money to insure that, to take on that person's as a risk, right? To
Mm-hmm.
insure. For example, with that 400 scenario, say it cost the insurance company $100 to insure this particular person, right? So that other 300 is then deposited into something called a cash value account, where now the individual will reap the gains of, say, the S&P 500. Say next year, I heard interest rates are supposed to go down. Say the market does well. Say it's, I don't know, the S&P grows to 10, 12%, whatever. There's some products that we have where the cap, I believe in some states it's 8%. The individual won't get the 10 or 12%, but they'll get an 8% rate of return on their money. And that'll be applied to that cash value account. Does that make sense, Paula?
That makes sense.
Right.
Okay.
And then their money is not directly in the market, like say with stocks or bonds or mutual
Mhm.
funds. The money is with the insurance company. However, they're getting the gains from the market without it being directly in the market.
Okay. All right,
Yeah.
that makes sense. All right. So what
Yeah.
about whole life? I mean, because the fees on the whole life, your premiums are so high. It's almost like,
Whole life is right. It's a more expensive product, because whole life policies pay dividends. At least some companies still do pay dividends. So that's like the, I guess, the Rolls Royce of life insurance, and index universal life. It's more flexible. It has the ability to say someone's annual premium is, I don't know, 15,000, 20,000. As
Mhm.
long as that insurance company gets that 20,000 by the end of the year, they don't care if you pay 500 in January, 300 in February, 600 in March, as long as they get their money by the end of the year, they're good. It's flex. I have an index universal life myself. So um it has that flexibility built in, which a lot of people like, versus with the whole life, it doesn't. It's just a straight, if it's 500 a month, it's 500 a month. But you do get the dividends with whole life policies that you don't get with the IULs. So it all depends on really what the person, what they desire, where they are now, and what vehicle may be the best vehicle for them at that time.
All right. So this is financial class 101. So for someone, right, who's listening and say, this is making sense, but what is even dividends? Talk about dividends. What are
So
those?
dividends are what an insurance company pays out to the clients,
Mhm.
because mutual companies pay out dividends. So that's what those are. But that's a good question. So one of the things too that I like to tell people is it's the diversification of your money. Like I said, I had majority of my money in a 401. I had all this money in a 401k, and because I just, the company matches, and that's great. I take advantage of the company. You should do that. However, you shouldn't put all your eggs in one basket,
Right.
because again, if something happens and you can't access your money, you don't want to pin yourself in a corner financially.
Mhm.
So that's why I tell people, even, I hear all the time, I have life insurance through the job. That's great. But do you know that policy does not belong to you? It belongs to the company. And if you are not actively at work, and something happens to you, sometimes that policy may not even be valid. So
Tell
it's
people that.
important.
Okay.
Yeah, it's important to have your own, so
Wait,
that if
wait, wait,
something,
wait. Okay, you lost me there. So you're saying
yeah.
the life insurance policy belongs to the insurance company, but so it's good to have your own. When you take out the life insurance policy, isn't it your own?
No, so when someone works at a company, say someone works at I don't know, Verizon or something, and
Okay.
Verizon offers benefits to the employee, like a life insurance policy.
Okay.
That policy does not belong to the individual. It belongs to Verizon.
Got you.
That that's what I'm saying. So if someone, I remember when I was studying for my insurance license years ago, I was watching a video in the class. It was a couple. I think they were in the Midwest, if I'm not mistaken. The husband worked on a job. He only had insurance, life insurance through his job. He got hurt, but when he got hurt, he wasn't actively at work anymore. The man ended up passing away, and the wife went to collect the money from the job policy. She
Mhm.
didn't get it because he wasn't actively at work. You see
Ah.
what I'm saying? So that's why I say, when people tell me, I have insurance through the job. Yeah, that's great, but that's not your policy. That's Verizon's policy, or that's whoever you work for's policy. It's not yours individually. You need to have your own. And that's where
Hmm.
there's some a disconnect too, with people who have jobs, and again, they everything they think is to the job, but that's not yours. It's the company's, as
That's a
long
good
as
point.
you're actively working for the company.
I wonder how many people really know that, Sharon.
They,
Because
they
you hear the
don't.
word life insurance, and whether
Yeah.
it's on the company, because you're working there, you think, well, it's my life insurance because those are part of the benefits, but they don't think that they need to have their own.
No, they think
Wow.
that that's sufficient, because
Mhm.
but that's the company's policy, not yours. There's the company has a certificate, and they have a whole bunch of employees with all their name. That's their policy, not yours. Yeah. So that's why, and then you leave your family exposed if something happens now. Again, and this is where we're going to, I'll mention this, the no life insurance wheel is something that I saw online, and I wanted to share with you, because we think about, oh, I got to pay a premium. No, listen, if a person doesn't have life insurance, Paula, one, there's no money for the funeral. That's the first thing, right? There's no money for the funeral. Then there's family members who can't afford to travel to your funeral. That happens.
Mhm.
There's the family is forced to cremate the person's remains for financial. It's cheaper to cremate people than to do the casket and all that other stuff. Then there's no grief counseling for devastated family members, right?
Mhm.
There's no money to cover lost wages. That's a big thing. Then family members have to go back to work before they're ready, especially if there's small kids involved. They don't have time to console a kid
Mhm.
and take a kid to therapy if their father passed away or their mother passed. There's no time for that. They got to pay bills, right?
Mhm.
Then there's family must repay your debts out of their own
Yes.
money.
Yes.
No,
That's not that individual's own. Now you are the survivor,
yeah,
spouse or whatever, and you're
yeah,
responsible for that person's death. Yep.
yes. Someone I know, they have a whole lot of debt on their back right now when their father passed away because their father left things in disarray.
Wow.
And I'm talking millions of dollars, Paul. I'm not talking about a little bit of money. Yeah,
Ooh.
it's to the
Wow.
point where there's liens on stuff and, yeah. So there's things that, we really don't, and this is something my manager said to me, and I say all the time, when someone dies, they die, but their responsibilities don't die with them.
That is it.
They're still
Mhm.
alive and well, and
Mhm.
they can go on for years and years and years and years. So,
Mhm.
I had a conversation with a friend just this past week. We were talking about life insurance months ago, and she stopped. She's like, "Oh, my husband." She just told me that they got in a car accident, her and her son, right? And thankfully, no casket is involved. No one died, but the car got completely totaled. She was scared, and I said to her, I said, "Now, if this had turned a different way, do you have money? Do you have about 15, $20,000 to do a funeral right now?" She's like, "Nope." She's like, "Okay."
Yeah.
So you had a question?
Yeah. So you were talking about a friend who was in an accident, and
Yes.
thank God nobody passed away. But
Right.
to recount
Hmm.
that, she said, okay, so let's do insurance. So
Yes. Yes.
so my question is, because I hear about this, we talked about whole life insurance and how much more
Yes.
expensive. You said that's the Rolls Royce of life insurance. So what about
Yeah.
term life insurance?
Term can work, some coverage is better than no coverage, and they're on a budget, they're a blended family on a budget. I said, you know what, let's just get a term with a conversion rider on there so that when things do change for the better financially, you can convert that to a permanent with cash value.
Okay,
But
so
at
that's
least
what
have
you
some type of
mean by,
coverage.
sorry, go ahead.
No, no, at least have some type of coverage that if something happens,
Mhm.
you're not scrambling to pay for a funeral. You're not trying to, and this is a blended family. They have quite a bit of kids. So it's, the thing is, though, if anything happens to the parents, the kids' lives are going to be interrupted financially.
Yes, yep, that's a big thing. But
That's the big.
I do want to ask you though, because I hear a lot of ads on, and I know you work for, may not be what your company does, but I hear a lot of ads on the radio or TV about you can get a term life insurance without, any medical
Medical exam.
evaluation for $10 or, a ridiculous amount.
Yeah.
Are those things that are true? Should people really be fall for that?
So that's a good question, Paula. So the first thing is about the medical exam. There are some companies that, if a person is a certain age and they have a certain medical history, they can bypass the medical exam. That's more in the less than 50, no meds kind of scenario, pretty healthy. Once someone's over, 50, 60 and on meds, they're going to do a medical exam. So
Mhm.
that's how that works. And then if a policy is really $10 a month, someone asked me this a few months ago. Um, that they're and I know one of them is like Colonial Penn. They always do those ads. That's not that's for the lowest of, it's like usually for $750 of coverage, like when someone died. It's very low. But they break those,
155.
yeah, because they break those down like into units. Really, that $10 a month, you'd have to multiply that by unit. It's a they just trying to get your attention. But you would not get substantial coverage for $10 a month, Paul. There's just no way.
It
No,
seems
no.
too good to be true.
Yes, yes, it is. It is. So yeah, but it's best to reach out to someone like myself. If you don't know, ask someone that you know for hey, do you know someone that does life insurance? Do you know someone who's a financial advisor? Reach out for a trusted individual. Don't just go off of commercials on television or those types or the internet. That's not the best thing to do.
Mhm, mhm.
Yeah, yeah.
All right. So,
Um,
you talked about there were three types of monies: the tax deferred.
yes, the taxable and the tax exempt.
Okay.
Yes,
So,
yes,
we've touched on the tax deferred,
yes, yes.
talked about the taxable.
The taxable now, that's the CDs. That's you put money in a CD, you're gonna pay taxes on the gains.
Mhm.
Money market accounts, bank accounts. You put bank accounts, you do pay taxes on your money. Mutual funds, this stock dividends, you pay taxes on it. Corporate and treasury bonds and real estate. You sell a house, you get proceeds, you got to pay taxes on the proceeds. The government wants their cut, Paula.
Yep. Yep. Well, for things to work, I mean,
Yeah, they,
for the lights to work on the streets and, you
that's
know,
right.
the
That's right.
garbage to be picked up. Yeah, I
And
understand
you
that.
gotta pay taxes, right? So that's those are some great vehicles. Real estate's a great vehicle for building wealth. Mutual funds are great, not in this climate right now, but those are great. So it's not like you know um, you shouldn't use the tax deferred or taxable buckets. You should again diversify. It's just you know incorporate the tax exempt. Rethink about how you think about life insurance. Oh, it's just a pilot. No, no, no. There's so many things that you could do. There's something called a lifetime income rider that you can put on a life insurance policy. What that means is someone can convert that use that policy cash value, say at I don't know 65, 70 in their later years or whatever age they want, and then start receiving income from that policy till the day they die. Lifetime income. We're using it like it's an annuity.
Mm.
That's a great way to supplement your retirement.
What did you call it again?
It's a lifetime income rider.
Lifetime income rider, which is,
Mhm.
you say, similar to an annuity, but it isn't an annuity.
Right. It's a rider that is on, when I, help my clients, I always put it on there. It's free of charge. If someone does use it, I think I think it's like $50 if you do want to use it in the future or whatever. But what it is it allows a person, and I usually um set it for like age 65, that retirement age, that common retirement age, or 60, whatever they desire.
Mhm.
And then they can say, hey, Sharon, you know what? I want to activate my rider. I want to get my lifetime income from my policy, and that's a great way to say, hey, you're going to get, I don't know, $2,000 a month to the day you die or whatever it is. It helps. It helps. It
So
definitely helps.
is that for any particular time? Well, I mean, can you use that for term life? Well, term life comes to an end.
Term life,
So,
there's no cash, right? It's only for the permanent policies that
okay, for
you
the
have
permanent
that
plan.
option. So
Okay.
again, that's the beauty of, paying a policy and having cash value accumulate. You have options, so and another thing I got my permanent policy for was for the medical riders, God forbid, of any kind of illness. That was a main concern for me as I was approaching my 40s and stuff. I didn't There was nothing on the term that I had. And I know people around me who were catching cancer and different types of things, and I wanted to have something that if anything God would happen to me, I'm able to use some of that money tax free. Just this past week, one of my clients, she got approved on Monday. I kid you not, Paula, text me on Wednesday. She was diagnosed with cancer.
Whoa. That is
Kid you,
real life.
that is a real life,
Real
real
life.
life happened last week.
No,
Yeah.
this is not a fiction. This is not a fairy tale. This is the
No,
truth.
it's not. This is the truth. And I'm just grateful that I nudge her, like, let's move forward with this policy and kind of, because now if she's not writable for at least 5 years.
Wow, that's scary.
Again, that's about protecting your insurability. That is getting life insurance before something happens. You
Before
don't
some-
get it you can't get it when it happens. You get it before.
Yeah, yeah.
Yeah.
Wow,
So
Sharon, we could talk about,
I know
money.
you could talk. Yeah, yeah. I have stories every week. I get stories every week. Yeah, yeah.
Yeah. So we're about
So,
to wrap up. Is there anything else that you really feel is crucial that we haven't touched on, but you'd like to, touch on a bit? And maybe we can continue on the next show.
okay. I would say, look, this is the end of the year. We're approaching a new year. Everybody's, the economic climate is not the best. Everybody's, worried about this, worried about inflation, and all. Look, seek out for help. If it's not me, find someone that you can trust to lead you, try to guide you in the right direction. You can't keep doing the same thing and expect a different result. It's not going to work.
Yep.
It's just
Don't
not.
keep doing the same thing and expect a different result.
No.
Yeah, we hear that, but sometimes we need to hear it again and
Right.
again.
Yeah. And this is changing, our financial future or planning for it is not an overnight. It's like cleaning a house. You clean the bathroom today, right? You clean the kitchen tomorrow. It's putting pieces in place, the foundation in place. It's one step at a time. It's
One
it's it's
step.
not easy, but it's possible. You know what I mean?
Yes.
Yeah.
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 Awesome. Awesome. So Sharon, where can people find you online? I mean, every time I speak with you, I learn something new. I'm sure people are listening or viewing. I keep having to remind myself now this is TV. So
Yes, yes.
how can people find you online?
They can find me on LinkedIn, Sharon Carter MBA. They can find me on Instagram. I am Sharon P. Carter. They can find me on Facebook, Sharon the Resource.
I like that one, Sharon the Resource.
Yes, that's it. That's why I'm a resource. Yeah.
Yeah, yeah.
Yeah. Yeah.
Sharon is always such a blessing to
Yes.
talk with you. And I know
Thank
that
you.
my viewers and listeners must feel the same. And so, to my listeners and viewers, if you enjoyed what you just heard from Sharon Carter, please tune in next week for another episode to learn something new and to be inspired by these amazing women guests that I bring on. I had a male last week and he was amazing too.
Oh, good.
And for me, you can find me online on my website, which is www.chattingwiththeexperts.com, or on LinkedIn as Paula Okone, or on Instagram, and my IG handle there is at chat_experts_podcast. And as usual, I mean, my mantra is that I learn something new every day. Thank you, Chapman. I learned something new, and this is not my first time talking to you about money, but I learned again something new. Thank you,
Well,
thank
my
you.
pleasure. And thank you for having me here again. It's always a pleasure to talk with you, Paula.
Always a pleasure.
Yes.